you at the time being, it actually is 12 p.m. on the East Coast. It is 9 a.m. on the West Coast. And I'm coming to you this morning, talking to you again about the strategies we use to determine which stock we'll be picking. We determine that based on certain criteria. And that criteria basically is that first and foremost, they have a small cap stock, mid cap stock, and large cap stock. The small cap stock is usually found in the small cap gapper section of this chart. And I actually spoke to you guys in the previous segments video. If you didn't see Stock Trading 101, I suggest you go back to my channel, Fat Cat Multimedia, and subscribe, like and subscribe, as well as like and subscribe. This channel, Fat Cat Multimedia, is one of the channels. This is WPKB Media. Like and subscribe. When I look into this chart, I look for certain stock that have a float of less than 10 million shares, and I also look for a value of at least 1 million shares or more. That is how I determine primarily which stock I'll be focusing on for the day. There are several stocks that are there, but the ones that are in the magenta color are the ones that I primarily focus on because they kind of fit the criteria that I'm looking for. Once I have the criteria I'm looking for, value and floats, I then head over looking for catalysts to see which catalyst or what catalyst has caused these particular stock to have a fluctuation. So it could be any number of things that can cause a fluctuation. It could be some news about some sale, a news about FDA drug approval. It could be any number of things that will cause that fluctuation. So the long and the short is we're always looking for some type of catalyst to determine why it is that this particular stock has moved the way that it has moved. So we go with that notion. We look in places like finviz.com, Seeking Alpha, or even on your phone, on your smartphone, they probably has some area that has stock tracking. You can check and see based on the stock that you've picked here with their ticker symbols to see what is the reason that these stocks are moving. Sometimes there is rumor, sometimes there is not. Sometimes there's actual data that supports that, sometimes there's not. The bottom line is, if you give me 1 second. The bottom line is, if you don't have a catalyst, then you have to assume that this could be a false movement, meaning that there may be no reason at all, and it's just moving based on some rumor. And you have to think about rumors in this regard. You can buy the rumor, but if it's actually news, you can sell the news. That's just the theory we have here in trading. Again, this is small cap. The strategy itself is gapping, which is basically when the stock goes up a little, you take the little bit of inches upward as it goes. If you're doing it in a buying long, meaning you're buying for the hopes of it going up, then you're grabbing your profits as you go along so that you minimize your risk. Same difference if you were doing it in the reverse, but in the case of a sell short, which is what you have the stock at a high price, and you want to come down to a lower price, you actually just want to get in the money, meaning make sure you have the profit by first selling the stock with a margin account, and then capitalizing on that by grabbing the stock when it gets to a low level price somewhere in the lower level. That's the reverse of buying long. The reverse is buying short. So both ways you could make money when the stocks are going long or going up, when the stocks are going down or going short. You can just buy either way. In the case of going up, you're buying first, then you're selling. In the case of the selling short, you're selling first and then buying it back. You have to have a margin account to do that. So that right there is, if you're an accredited investor or you know anything about margin accounts, you have to check with your broker to see if they do provide that for you and if you're qualified for it. The other thing I wanted to mention to you is that there are other things that come along with this. There are things what we call derivatives, options. What an option is the option to buy a particular a particular equity, which is a stock, at a given price before a given time. Now, in the case of a call, you want to buy a particular stock at a discounted price, even when that stock has a higher price somewhere down the line. So let's say, for example, with the case of Tesla, I had an option that was a 440 option that was expiring October 2nd. What I wanted that stock to do was go up to that high price that they had once before at about $500. That would put me in the money as far as the profit, which includes the cost of buying the option. and then I can exercise the option, which is I will be able to get that particular stock at 440, even though the current price would be 501 or 502, which would already put me at a profit. And then I would have to turn around and either keep that stock, having bought it at a discount, or turn right back around to the market and sell it, which would give me allow me to realize the gains immediately. So there are three things that can happen with an option. An option can either A, expire, it could be exercised, or it could be sold. So if it's sold, it means you're just taking the option and it went up in price. Say you bought the option, in my case I bought it for $51, the value now is worth $61. I go and sell the option to another person, just take the margin and leave it at that. The other option is, like I just explained to you, if you actually have it where the value of the stock goes up and you're able to take that option and exercise it and buy the stock at a discounted price, thereby making profit. That's the same as a short sell. It's high at this price, but you're getting it at this price. You can turn back around and sell it, or you can just keep it having bought it at a discount. And then when it comes to trading, we're just trying to move the stock along. We're not necessarily trying to hold anything in our account. By the end of the day, we want to make sure we're in a cash position at all times. There are times where you do have an overnight trade, we call that a swing trade, or something beyond a day. It would be considered it wouldn't be a day trade, it would be a swing or anything after. So again, we're looking at this particular chart focusing on one particular thing, and that particular thing is, where is it that this particular stock is getting its motion from? What is the thing that's causing the stock to do what it's doing? Now, we could take the same information and same know-how and extrapolate that into scale. You can scale up. You can take that knowledge, the 10 million in float. Well, you have a stock over here. This price is here, down on the other side here. These prices have a stock value of a lot more. So instead of saying a $10 million float, we would probably look for a $100 million float or less in this case. $100 million float. And as far as the volume is concerned, we have 1 million. So we can look for anything from 10 million, basically just adding a zero. So we're taking the same information and we're taking the same knowledge and we're being able to scale it just by adding a zero. I always speak about the power of zero. It's a placeholder, but it has a lot of power. So that's how you would scale this particular situation. You would take the same know-how. The big difference with the bigger stock, they're actually a safer bet because they're not as volatile, but the non-volatility means that it has a slow movement. So that's why, again, you could look for a stock that has $100 million in value or more, not even just 10 million, or anything from 10 on. When it comes to the larger stock, the reaction will be the same. The difference in stock purchases, you'd probably use about 10,000 shares here to make the same money as you would use 1,000 shares on the larger stock. So 1,000 to 10,000 on those stock, and then 10,000 and above for these stock would kind of yield you the same thing. Again, we're just moving zeros. So that's kind of how you would scale up. So basically, I did have a chance to go ahead and grab a couple of stocks that we're looking at today. And keep in mind that right now, you're looking at this program and the time now is 12 p.m. in the Eastern Standard Zone, which means the market has been going for about 3 hours now. If you're on the West Coast, you're just getting started. So we did pull some stocks out earlier today so that we would have something that we would be able to look at. Now, these stocks have moved since the opening of the bell. Again, I get these stocks information at 8 o'clock Eastern Standard Time, and I'm able to make moves based on the information at that given time. But the stocks that we had on the watch, I'll just give those to you, and they're probably still making moves right now. As a matter of fact, they are. We got PPS, WWR, and XTNT. Those were the three main stock, among other stock that I may have looked at. But as far as my watch list is concerned, I do send my watch list out. You go to the Facebook page, that's Fat Cat Capital, PHATKAT Capital. You will see some trades that I have done, as well as the stock pick of the day. Then you would go there and you would take a look, and you can join the community, which we all have a little bit of information we can share with one another. But getting back to the particular picks, again, even on YouTube, if you go to the YouTube, which I need you guys to really like and subscribe, because if you want this to be something you want to see more often, as far as the classes or as far as learning to trade stock, you need to like and subscribe to WPKB Media. WPKB Media, okay? And then I'll be able to continue to do what I need to do with respect to this. And you can watch it live, which is taking place live right now. I come on air from 9 to 9:30. Again, from 9 to 9:30 but that will be Pacific Standard Time. Pacific Standard Time. I was attempting to do Eastern Standard Time. I think that the time zone inside the system got messed up, so I ended up doing the programming again today, right now as we speak, although I attempted to do it earlier today. So, again, we're looking at catalysts. That's the first thing we're looking at. We're going to alpha, so I would go into alpha, seeking alpha, which would be a particular app, and I would see what exactly is going on, what exactly happened. Now, we would take the same approach throughout the day. Even after the day started and you're looking for something to trade, you would basically go back to looking for the same things. What's the catalyst? How much gapping or movement is there in a particular stock? So let's just say I went out and I checked FinViz, and this is midday, so it's kind of good because by midday you can just wash, rinse, and repeat. Now, you're going to focus more of your attention on the higher quality stock during this particular time. The volatility for the other stock is pretty much out the door between 9:30 and 10 o'clock. And then it may extend up to 12. But after that, your focus is more so on the higher quality stock, the Tesla, Apple, for a day trade. You may see some unusual activity on any given stock at any given time, but for the most part, you're going to be focusing on the higher quality stock. But breaking news will also be in these charts as well. If you go here, you will see it says breaking news. And right now, breaking news says CHNR trading at 4,600% above historic value, or LQDT. So this chart itself, Trade Ideas chart, which you can pay for the pro version, and there is probably something out there, well, lesser than pro version is what you can use as well, but as you get more sophisticated, you want to have as much data, as much information as possible. So you take this Trade Ideas, you go and you look at the charts. You have a chart that talks about the small cap. You have a chart that talks about the large cap, right? So now throughout the day, we began our trade. We've been trading. So after you have exhausted the trades or the watch list that you've already been thinking about using, you create yourself a watch list, right? Where do I create this watch list? I'm going to ask you to create yourself a interactive broker simulated account in which you'll be able to create a watch list. Every day you would put a date in the day, create a new watch list so that those stocks for that day are on that particular watch list. But you also should have a favorite watch list in which you also add it to that. That's your overall watch list that allows you to watch stocks from the very beginning and continue to add to that list. Because some stocks that you may be familiar with from previous trading, you will be back in the watch list again, and you'll be like, oh, okay, I'm familiar with this trade, I'm familiar with this particular stock. Let me go ahead and look at what's happening with it today. So, again, you now have picked the stock. As far as the small cap is concerned, you've also taken an opportunity to go to the large and mid cap stock and take a look at what they have going. So the bottom line, find something to trade. That's really what you're trying to do throughout the day. You're looking around to find something to trade. So by midday, I might go back to Seeking Alpha, right? And I'll go and look and see, well, what's happening? I'll go to FinViz. Right now, if I'm on my phone, I might go and say, okay, I need something to trade. What's trading? What's hot? I could have had some other stocks on watch, but right now, I told you the small cap stocks that I had in the watch list. So I go to FinViz, and I'm going to look right on the very front of FinViz, and I'm just going to see what's gaining during the midday. Also, you can subscribe to CNBC market watches that will send something to your phone. There's another market watch. There's NASDAQ. There's plenty of market watches that will send stuff to your phone midday. But if we look at the gapping right now, it says PPSI, which we had already selected. Then it says OPTT. Then it says APWC, CHNR, which I told you a little while ago. There was some unbreaking news over here, so that's going to be some movement happening with it, begin later during the rest of the day. So again, FinViz will tell you that information, but there's plenty of places out there. I'm giving you my subscribe way of how I handle this. So in the morning, I already know which stock is going to have what movement and which way I'm going to be playing it, whether I'm playing it long or short. And then in the midday, I'm still searching out for new stock. And there's days that you may not have anything to trade. You know what? That's okay too. You could be preparing for another day, or you could be looking back at some historical data. Again, we don't focus a lot. These are technical analysis, which basically, if you had watched my Stocks 101 video, which is on Fat Cat Multimedia, go there, like and subscribe. That's the class channel. You will know that we focus on technical analysis for trading, right? And that's for the purpose of trading. So if you're talking about trading, you're not concerned about the overall condition of the company 3 or 5 years from now. You're concerned about what's happening at a given time right now. So that's kind of what we focus on. These numbers are more based on that. This is not recommended for investing, okay? That's a different type of analysis. It's a fundamental analysis. It talks about the overall condition of the company, it looks at some historical data, then it kind of looks into the forecast, gives you something that you can bite onto and basically decide if you want to go and invest in that for the long term, 3 to 5 years. But this here is day trading. This is focused on the technical analysis, what is moving the charts right now, or what's moving a particular stock right now, and the reason behind that. So there's also another program that I may tend to, I'll look at, I'll have a look at. While I'm on YouTube, I go look at a couple of programs that I'm familiar with that I like to kind of chime in on and make sure I'm on the same page as some of the other of my colleagues, other professionals, and I get a further confirmation as to what it is that's happening. But as you go along, just like myself, you start to not rely on just someone else's information, data, and analysis, but more so on your own, based on your own strategy, your own learning. Now, if you want to learn more about this, you can easily subscribe to my channel, Fat Cat Multimedia, which I'll be doing training. You can subscribe, sign up, and like the button, hit the like button, hit the subscribe button, and we will soon start having membership. So this particular information will be available to you so that you can continue to learn and grow, because there's many things that you can do with this information. For example, what I'm teaching you now also can be applied to foreign currency exchange. It can be applied to the options that I mentioned. It can also be applied to the stock. And it will not, and it does not right now talk about bonds or fixed market income. That's a whole nother category, a whole nother class. I'm talking about interest rates. So that is something totally entirely different. And last but not least, which this is not that correlated to, Bitcoin currency, Bitcoin exchange, because there's really not a lot of catalysts with Bitcoin. It's really harder to kind of predict which way that's headed. But nonetheless, Bitcoin historically should move contrary to the market, or as a hedge fund or a balance like gold when it comes to the market. So that's the long and short of Bitcoin. It's a safe haven like gold, but yet it's not like gold, and gold has real permanency and real stability as far as it being a safe haven. So going back, we have chosen certain stock. We have done some trades. We might have longed a couple during the day. We might have shorted a couple. It's okay to take a break and sit in something. You might sit there and say, well, let me see what's going to happen. Let me see if we have any other thing that we can be thinking about or looking at as we're sitting here waiting for us to happen. So, again, what you also have to realize is that not every day is a trade day. Sometimes you always have to look at the overall market. Is today a down day for the market? Are there going to be some, major reporting as far as quarterly reports? Is there some major lawsuit or government finding or government FDA approval? Things like what's going on in the overall market will give you a better indication as to what you could or should be doing here. So you mustn't get caught up on just the individual stock more than you have to look at the overall condition of the stock market on any given day. But these stocks itself, they run independently. So there's times where you'll be making money, you'll be in long positions, and you'll be profiting where the market could be having a down day. The market could be slow, or it could be stagnant, or could have some other reason why it's going in the opposite direction. That is the part where you don't get caught up on, the market's down, therefore, because even in a down market, as I indicated earlier, you can short positions, which still gives you an opportunity to make money. So that's how we deal with that. So your long positions are basically, as I said before, when you buy into a position of a stock and you hope it to go up. A short position is you have a stock that is already at a certain value high, and you're hoping that it will go low so that you can buy it at the high level and buy back at the low using borrowed shares from your broker with a margin account. With a margin account. So we'll repeat that one more time. Long, short. Long is you want the market is predicted to go up, right? Short, you want the market to go down, and you want to buy high with margin shares and then sell, right? That's how that works. And that is basically your two ups and downs, your options, your call, your buying or getting a discount on option. An option, you don't have to take the option to buy, right? And then with the put, you're getting the option. In this case, you have to sell at a given price. And that is particularly different between buying and selling with calls and puts. The option is an option to buy, a put is a call, an option to sell, right? And extrapolating this information from small cap stock to mid cap stock right here, it's basically the opportunity to take the knowledge you already have and move it into another route. Other than that, you'll wake up probably around, I don't know, 3 hours before the market opens. In the case of West Coast, you will wake up 3 hours before the market opens, because at 6 o'clock your time, it'll be 9 o'clock here. Other people here on the East Coast, they'll wake up probably like, I don't know, 8 o'clock, and they'll go ahead and get their information and their news. Or if they're going into an office, they'll get their news between 8 and 9 and 9:30. That way they know what they're going to be stock watching before the day even starts. Same with you, whether you're getting up at 6:30 and you're getting yours, in the case of the market starting at 9:30, even if you get up at 6, you still would have, on the West Coast, 30 minutes before the market opens at 9:30. So you get up at 6, you would do a 30-minute news check and get your stock list ready, and then make your moves. When the market first opens, you do not want to jump right in, necessarily speaking, because there's usually a big dip that happens, and sometimes there's some pre-market orders that are waiting to be executed at the 9:30 bell. So sometimes and many times the stock will dip down significantly, and either one, you can panic sell, or two, you would be in a situation where you don't know if it's going to continue to go down, and so as a result, you might actually be in a stock that's taking a down ride. So you give it about a minute, 2 minutes, or even 3 minutes to see which way the market is headed. At most 5 minutes, because you can take the 5-minute chart. If you get the Interactive Broker Simulated account, there is charts that will tell you a 1 minute, a 5 minute, a 15 minute, a 30, an hour, and then it goes up to at least a day, about what's happening with that stock. So yeah, if you set it to a 5 minute and you give it 5 minutes, and then you look and see the direction that it's going, you can pretty much determine what you want to do at that point. You could come in at the 1 minute. There are even pre-market orders. People actually have, in some accounts, the ability to trade before the market opens, which is another realm altogether. But if you have that ability, you can do it as well. Most times people are sitting and waiting. There is something else that we also use to determine what's happening with the particular stock. It's called VWAP, which is the volume weighted average price, which is basically an indicator as to what is happening with that particular stock, at least with that particular industry. If we were talking about, like, for example, we were talking about semiconductor stock, and we were looking at the prices on average, which way they're headed, it would give you sort of a trend, and then you would compare that on the graph to the way that the particular semiconductor stock that you were following is going. Is it going the same? Is it going in the reverse? Is it going higher? Is it going lower? And that would give you an indication as to where you should be as far as the position is concerned. If it was above, right? Now, it's above, it might be oversold, overbought, and it might come back down to VWAP, and you can just say, well, I'm going to wait back to drop down to the price of VWAP before I get in. If it's below, right, then you have to decide whether or not you want to be in it, because now this is actually less than the average, and you don't necessarily want to be on that side of the fence. So, long story short, I'm giving you a summary of my daily day. I wake up, make sure that I've had a good amount of rest. I make sure that I get my exercise in, my morning exercise. And that can include my daily walk, my routine, or whatever it is that I normally do. And if I'm going to eat breakfast, I'm not a breakfast eater, but if I were, I'd probably eat my breakfast, and then I would be able to come in and calmly look at what I'm going to be checking on as far as the day is concerned. But after you've done all of that, it comes the time to trade. So you get over to you can actually go to a YouTube or anything out there, and you can find the chart. You can go to Trade Ideas and find the chart, right? This chart you can find on YouTube. It's one of the subscribers that I deal with, or one of the people that I associate with. And you can find the chart, read the chart, know where you want to look and focus your attention on, and then once you know what you want to focus your attention on, you go and start looking for news for those particular stock. The market opens up. You put in your orders, give it about 3 to 5 minutes to make sure the market is going the way that you hoped in a particular stock on your watch list. Then you go ahead and get into those positions, not just leaving it cold, but you have to be in and out and watching it from the time you're in to the time you're out during each particular one. Now, the way that I do it, I'll put a buy and a sell in at the same time, so I don't have to sit and babysit it. So basically, what that does with higher quality stock, it will allow me to sell, get in the money, and then go back to the buy. With lesser quality stock, you may not have. There may be restrictions on short sales on any given stock. Let's go with that. But buying my sell, I put in, and then I can look at the other stock. Or if I buy in, at least get the buy-in part. Because when you put your buy-in, you're putting it at a limited price. They're not putting it in at a market price. Let's say if the market was hovering around $2.05, and I say I want to get in if it's at 5. So if it drops down to 5, buy my shares. So I got that order in, and I'm able to basically leave it alone, let it handle itself. And then at the same time, I say I want to sell this at $2.20, and I put the same time simultaneously in order to sell, so that if this stock comes in, it gets purchased, and then it goes right back out when it reaches my price, and there's my profit. Now I can do it the other way. It can be a short sell. I'm selling at this price if it hits, and it's coming down, and I'm gonna do that in the reverse direction. I'm gonna buy back at that time. So again, you can make money in market going either direction. That's number one. You have to be comfortable with being unemotional when it comes to trading money with money, and that's why the simulated account is very necessary. I highly suggest that you start with the simulated account. It's not a suggestion, it's a must. I started with a simulated account. I had a strategy that I actually worked on, and I observed other people utilizing the strategy as well. And it was proven to be effective. As a result of that, I adopted it as my strategy, but it's combined with other strategies. Strategies like someone who decides not to be a scalp trader, but someone who's going to buy on the dip. Someone who's actually going to buy short. Even with a good running stock, it pulls back. So there are people who will get the good commodity, good quality stock, and ride that one up and wait for a pullback, but always have a sell in, knowing that this will allow for sell, but you'll get some pullback with this stock because it's a good quality stock, but it will dip back because all stock run sort of like an up and down pattern. And pull back a little, and that pullback is what will allow you what they call buying on a dip, to get in the money, and then it dip back down, and you'll be able to just come out and cash out. So buying within a day, you have a day trade, you might have held something that's going to be, a little bit of a little bit of time before you can actually get out of that position. That's more of a day trade. It could last all day, it could last half a day. With scalping, gap trading, you're just in and out within a 10, 15, 20-minute period, in and out different stock. So you have different styles. So I kind of have a hodgepodge of the style of the stock, type of stocks that I use. Most people will tell you and commit to you, say, just have one strategy. I see them all working in tangent. It depends on the position, the type of stock, the volume of the stock that day, the flow, and whether it's a mid cap or a large cap stock. All is doable once you totally understand how the market works. All this is purely psychological, because these are supposedly not just, well, now there's a lot of algorithm technology in place that allows machines to do most of the thinking and the work. But these still, at the end of the day, humans make decisions. Humans making decisions that determine how the stock moves. So that's how you have to remember this, that this is humans making decisions, although, again, algorithms are already put in place, and it'll just kind of function on its own with most of today's trading. If you can get yourself an algorithm program, I highly recommend it. But again, that's a whole other story, a horse of a different color. To learn the market itself is really the preferred way. So no matter what you're doing, you can totally understand what this is. And again, your small cap versus your mid cap, right? That's all part of the equation. So take the time, do your research, do some studying, and take time to first watch the market and use predictions. Don't even get in. Go in with the information, test it out without any kind of trading, and see if it pans out to be what you said. Did that particular stock become a hot stock, or did that particular stock become a tradable stock on any given day? And then after you go with that, you got your simulated trade, but that's the next level where you start actually doing it, but you're trading with paper money. You're not using your own actual money, so you get comfortable with that. And at some point, you're going to actually trade it. So again, you're watching Earning and Learning with me, Akeem, the Dream. I want you to like and subscribe. Watch my program Tuesday and Thursday, Earning and Learning. Every Tuesday and Thursday from 9 a.m. Pacific. I may change it to Eastern Standard, but 9 a.m. Pacific to 9:30. And like and subscribe to the channel WPKB Media at YouTube. Like the page, Fat Cat Capital, PHATKATCAPITAL on Facebook. It's a community group. You'll see the trades of the day. You'll see people talking about stock. So with that being said, I'm going to wrap this up. The time now is approximately 12:30 on Eastern Standard Time and 9:30 Pacific Standard Time. Be safe, be good, go out and find something to trade. See ya.